Are we on?
Yep.
Oh, we are? Are they listening to me? Huh?
Yes.
Hi, everybody. Hello, and welcome to our next YouTube live stream. Hot Stock panel, Hot Stocks for the new year. Glad to be here. Glad that you're here, taking the time out of your day to join us for these Hot Stock panels. All of our past ones have been great. They've been a lot of fun. They've been a lot of information, very informative. And hopefully some of you have been taking note to some of the trades or some of the stocks that we've talked about. I think that if you go back and look at some of the ones that we've done, you'll see that a lot of them are doing still well. But some of them may not, and that's okay because we talked about entry points. We talked about exit points to make sure that not only did we give you the information, but we showed you how to utilize the information to make to make money in the market. My name is Glenn Tompkins, senior instructor here at VectorVest. And again, welcome. I will be the host for the next hour of this YouTube presentation. I have joined with me three esteemed colleagues and one from overseas. We have David Paul, who is the managing director of VectorVest UK. We have Todd Schaefer, who's the manager of research. We have Jim Penna, who's the manager of retirement. And again, myself, Glenn Tompkins, senior instructor here at VectorVest. So you're going to get a good splattering of information. Splattering, maybe. It sounds, I like it. Anyway, it's my word. I'm the host. I'll use it. Splattering of diversification of information out to you guys. You'll notice that a lot of us do trade differently. And you know the cool thing about that is we can appeal to just about everyone in this room. If you're new to the YouTube presentation, we're glad to have you. And if you like what you see, folks, do not forget to comment, like, and subscribe. The biggest thing that I would like to see you do is comment. These videos are recorded so that if you're not here live, you can watch them at a later time. But comment on the videos. Tell us that you like it. Tell us you don't like it. Tell us that you love Todd and, of course, that you love David, but maybe not Jim so much. You know, we just want some comments out there. We're trying to grow the footprint of our YouTube what's the word I'm looking for? Our YouTube exposure? Is that a good word?
Presence.
Presence. Thank you, Todd. Todd and I sit right across from each other in the office, so we have two offices, side by side. I bug him every day because I forget a lot, and he helps me out.
Because you can.
All right, because I can. So don't forget to comment, like, and subscribe. All right. At the end, we will be giving a giveaway, another giveaway. We've been doing this for our Tampa 2020 two-day event in Tampa, Florida. It is always, what is another word I'm looking for? Todd lost the coin toss? I don't know. What's the word I'm looking for? It is, it's one of the biggest events that we have every year. And it's normally in the first week of January. And during that, we always introduce a lot of new products within the software. And it's a great way to lessen your learning curve on how to use the software. You get to talk to the instructors live. You get to get your questions answered live. And actually, you get to pretty much put a face to the voice. You hear a lot of these instructors on an ongoing basis, but now you get to talk to them live and in person. So we will be giving away a free pass to the event, whether you want to stream it at home or you want to travel to the event. You know, this is the time of the year, especially if you live in cold climate, this is a good time to take a couple of days and go to Tampa. Right, Jim?
I agree, Glenn. I agree.
Okay. The Tampa two-day event, by the way. In this year, we have two tracks. We have a retirement track or, streamlined to retirement options. And then we have a more aggressive track or trading track. So I believe this is the first time we're doing that. So it's a little bit different. If you've never been, you want to go. If you've gone before, it only gets better. every year. So, all right, so to enter, you're going to go to a website, www.vectorvest.com/win, and let me get you to that page, what it looks like. There we go. www.vectorvest.com/win to attend the all-new 2020 two-day seminar investment. Enter to win a free pass. Right now, you've got 27 minutes and 40 seconds left to do it. So go to that website, fill in your information, the first, last, email, and confirm it, submit it, and you will be entered in to win that free pass to the 2020 all-day, two-day seminar. All right, and there's the two tracks, retirement-minded and short-term traders. This is the first time we're doing that. All right, does it include airfare and hotel? For you, Jay, no. For everybody else, still no. All right.
Hey, Glenn,
so,
you should also mention that no matter which track you choose, you get the recordings and all the support materials for both tracks, even though if you're there live, you only attend one live.
Excellent. So I don't need to say it. You just said it.
That's why I'm here.
All right, there you go. So even if you go down one track or the other, you still get the whole presentation, which I think is also kind of cool. Thank you for that. What's your name? Todd? Yeah. All right. The cutoff for the entry for this is 2:45. 2:45. After 2:45, Jay just got an ouch. After 2:45, it's cut off. You can't put an entry. So www.vectorvest.com/win. Joey, can you type that in the room just for them? Yeah. All right, so Joey's going to put it in the room. By the way, Joey is here. He's my producer. Say hi, Joey. Hello. Nobody heard him, but that's all right. He's sitting in the background. He's the guy that makes us all look pretty. For me, it doesn't take much. But for everybody else, it takes a little bit more.
He's got a lot of work
and he's doing that. All right. So the cutoff is at 2:45. Joey's already put the link up there for you as well. Now that you know everybody who's here, one more thing. No, we'll come back to that. Got some other things to talk about. So again, new, if you like what you see here, do not forget to like, subscribe, and comment, especially on comment. With all of that, let's get this started. Put your hands together, everybody, and let's go a big ooh-wee. That's right. This is what I do. I want to see how many Jockey Club members out there are going to type in a ooh-wee. All right? Because now I look like a blithering idiot because nobody typed in ooh-wee. All right, so we're going to move on.
Jay, I know you're out there. Help me out here. Will you? Help me out.
All right, with that, we're going to start with David Paul. There we go. Thank you, Jay. We're going to start with David Paul. And again, he is the managing director for VectorVest UK. David, it's all on you right now, my friend.
Thank you. It's a great pleasure and honor to be here, Glenn. Thanks for the invite. I'm David Paul. I started life as a mechanical engineer, PhD in mathematics along the way. I started to trade by accident because I went off to South Africa a very long time ago, 1980, to play professional rugby. And I was working at De Beers, the diamond people, and they put me into an office with an old fella who was doing something very strange. Every day he would update 50 stocks from the newspaper by hand on a drawing board. And it took him from 9 o'clock till midday to update all his stocks. And he was trading, and he was making decisions on charting, the old head and shoulders reversals and the triangles and whatever. And I watched him. I saved up some money. I put on my first trade in October 1982. And it was a winner. And they say if your dad takes you fishing and you catch a fish the first morning, you fish for the rest of your days. So I traded while working for De Beers until April 1988. And in April 1988, I cut the corporate umbilical cord, and I've been trading on my own ever since. And I did that full-time for 10 years. And I went off one night to an investment meeting, and the chap who was taking the meeting, the guy in your seat in those days, Glenn, got laryngitis. It's certainly not going to happen to you from what I've seen so far. But,
unfortunately, some might say.
So I took the meeting, and the meeting, in fact, went well. And out of that, I was asked to come into a stockbroking office to teach their traders how to become consistent. Traders in that trading floors, a huge trading floor, were making money and they were giving it all back again. And interestingly enough, out of that exposure, I put together a course called the Peak Performance Trading Course, which I sold to banks and big trading floors in the City of London and all over Southeast Asia. And interestingly enough, that's the basis of the course that I'll be presenting in this very room on Friday, the keys to consistent success. For the last 10 years now, I've been helping retail traders improve their performance with VectorVest in South Africa and in the UK, most primarily back home in the UK these days. So, today I've put together 4 stocks, 2 market caps, 2 stocks that I've done exceptionally well in personally, and 2 what we would call in England punts, for the more adventurous investor. Okay, so we'll start off with the first one, which is a share that I did exceptionally well in over the last few years, called Fortinet, and I think most people will know it. It trended strongly, and as you can see, over the last 3 years, is that 3 years, Glenn? Over the last
This is a 3-year graph. Yes, it is.
Over the last 3 years, earnings per share has been rising strongly, and as Ben Graham said so many years ago, that's the engine that's driving the share price up the page. So the share moved up strongly, and then it in fact went sideways in what technicians would refer to as a consolidation, and it's a textbook 5-wave triangle. And those of you that are technicians watching should be able to see the 5 waves within that. 1, 2, down to 3, up to 4, and down to 5, and it broke out of that very nicely. And if you were doing a book on technical analysis, you would have to have that in there. Now, very interestingly, Glenn, and this is something I note in all charts with VectorVest, right down to 3-month charts. If you get a consolidation, and within the consolidation, earnings per share is rising, then invariably the darn thing breaks the correct way. It does what it's supposed to do. And that's one of the core features of my own personal swing trading. The share has broken up and it came back. I think it's going to pull back to the last series of old tops. But if it were to break above 106, and the general market gives us some green lights on the front page of the general market, then I would be a buyer with a stop loss around $99. Okay, so I think there's a good chance it's going to pull back and kiss those old tops. But if it does break up, then I'd be a strong buyer. I think there's a long way to go in this share. Technical analysts would look at the flag pole or the run before the consolidation, and in fact just add that to the low, and that will project the targets, what technical analysts would call a measured move. So this is a share where the fundamentals look good and it's going the right way. When you put technical analysis and fundamental analysis together, you get outstanding results. So that's the first one I think that folks should look at.
Anybody have any comment on that stock at all?
No, it looks great. I love the fact that it has broken out and it's been strong. But can't add anything to what David just said.
Yeah, and that softened with the market. So, yeah, I'm along for the ride.
I love the history behind it. A graph tells a story. What you see is what you're most likely going to get. So it's been running. It consolidated. Love the idea of consolidation with rising earnings. And the stock's price is running right along with it.
Yeah, that is a feature of most of my swing trading on any time frame, and that's what I teach in the swing trading course that I presented at VectorVest UK. A consolidation, within the consolidation, earnings per share rising. I think one of the strongest leading indicators on VectorVest is that forecast earnings per share. It drives the share price, and I think, as you said, Todd, in one of the Successful Investing Quick Start courses, if it's moving up from the bottom left of the screen to the top right. Now, interestingly, I used to just look at a yearly chart, And when I've applied the same insight to a 3 to 5 year chart, if the 3 to 5 year chart is doing exactly that, then the probabilities of success go through the roof. And in the UK, we've got 3 individuals who are pioneering that for me in 3 different user groups in the UK, one in Oxford, one in Guildford, and one in Edinburgh, in fact. So I like the look of that stock. I think it's got a long, long way to go.
Let me add that you'll find that phenomenon highly correlated with high RS values,
Yes.
and FTNT with an RS at 1.42
Yeah.
falls right in line.
I was just going to comment on that. As anybody who's watched these or listened to me talk about anything, relative safety is everything. And as Jay said, FTNT has been showing up in some retirement searches. And I was just going to point out what Todd did, that relative safety, it all falls behind that. And then you add in the technicals that David's talking about, and you're putting the odds in your favor for sure.
Well, that's how we're cherry picking in the UK these days. We actually use a search in Unisearch called Long-Term Winners RS Descending, and we take the shares from that. We look at them initially 3 to 5 years and look an eyeball for that nice picture. Share price moving up the page, not too much volatility in the price, and earnings per share rising, forecast earnings per share rising, not too much volatility. And by cherry picking with that one thing, we've pushed the performance up significantly. So, absolutely winning technique.
All right, let's go move to the next stock, which is Tyson Foods.
Okay, well, Tyson Foods, folks, that's the 3-year chart, I think, and it's breaking up to a new high. I think the earnings per share is good here. In terms of fundamentals around the world, the price of protein is rising, and that's largely because of swine fever. And in Southeast Asia, pretty much every pig is dead.
Oh, why
Okay.
dead?
Yeah.
still love bacon, though.
That's adding to the margins in protein producers. That's just something on an aside. The chart says everything. If we, in fact, there's resistance on the chart. I'm hoping it's broken. If we go to a yearly chart from that now, Glenn, we can see that, well, at least I can see, earnings per share on the yearly looks good as well. And the share broke, and then it pulled back into the previous resistance, and it fell in a pattern that technical analysts would refer to as a falling wedge. Now, a falling wedge is one of the most positive patterns in the market, and it fell in a text from the high. So if you go to the previous high, sir, there, and you draw a trend line down the next three tops. And as the people listening, folks, will. I am a technical analyst, and I love the charts. I love looking at them, and then draw a similar line under the lows. Yeah, under those two lows to there. That's exactly right. Take it back a little bit, and you need to put it underneath the previous low. No, that one, and just take it back linearly without changing it. Take it back to your left.
Take it
Take it back, but keep it connected to the bottom.
Yeah,
like
exactly.
this.
No.
That's good enough. But that's a falling wedge, folks.
Okay.
There's 5 waves in it. It's a very, very bullish pattern, and it broke strongly out of that. Now, on British television a few days ago, I called that in a program called Core Finance that we do in the UK. It moved up very strongly, and it's pulled back a little bit, and it's starting to move up the page. And I would be a buyer of Tyson Foods again at 90. If it trades above $90.50 with the stop loss at about 87, that would be a really good trade. That would be a really good trade there. If it breaks above that last high, closes above that last high, then I think we're away. I would clearly like to see the advice on the front page of VectorVest being positive. VectorVest advocates buying safe, undervalued stocks that are rising in price. And it takes a great deal of presence, the word you used a moment ago, Todd, to actually just follow what the darn thing tells you to do. And that's a big part of my course on Friday, to show people how to build the awareness to get themselves out of the way. Okay.
Now you're putting your stop at the bottom of that igniting candle? Is that what
I'm
you're doing?
putting the stop at that last little low. I
last
think you
divot?
can, yeah, just there. If you draw a trend line from the low, Glenn, from
That low?
that low. There is a trend line running up the page there that I think the market has reacted to over the last few days. So I think that's a good place. You could put the stop loss further away, just mean you would trade a smaller position. But I think that the stop loss, half a dollar below that previous low will be just fine indeed. It's on a buy recommendation. I think there's a lot of legs left in Tyson Foods.
Chicken legs?
Chicken legs. That's a good, I like the analogy. Legs enticing food.
You said you were hungry earlier, I
I
remember.
am.
Yes.
I am. All right. Anybody else want to chime in?
I'll just real quick say again, I'm looking at, again, someone typed in, it's an email, so I'm not sure the name, that it was showing up earlier in one of the retirement searches again, I think ruler stocks. And once again, if you look at relative safety, you got a 1.48 relative safety on the stock. And so, you know, it makes me feel good to see those type of stocks come up on the screen. And then again, you add those technicals at just the right time to get in, of course, using the color guard. And it's just great stuff.
All right. Let's go to the next stock. EIDX.
Now, the next stop is not going to feature heavily, Jim, in your retirement, because this is
a prudent portfolio.
This is a first of all, it's to do with drugs, and they are the most unpredictable sods in the world. The share is making a series of rising bottoms. It broke a level that's been in place for 6 months. And it gapped through that level. You see the last two highs, there's a gap there. Yeah, just there. Now, one of the things that I've noticed over the years is if you get a gap through an obvious trend line, that's a major change in sentiment, and I call that the rocket launcher. Okay, good. Now what's happened is it moved up. Now I put the volume on here because you can see it broke on huge volume, which is good. Just there. You see that? Broken huge volume, and it's gone sideways on falling volume, and yesterday it broke out on rising volume again. So I think, folks, that's heading higher. Now, if we had the time to look at that on an hourly chart, in that little consolidation, you can actually see 5 waves in there. And we haven't got the time to do that now. And there's a little bit of an eye. Technical analysis is as much an art as it is a science. And it's one of those things where, you know, you need a big Waterford glass that it takes about 3 measures of whiskey to wet the bottom before you can see the patterns, you know. So
Whiskey?
That I can-
Well, I think we all just related to that.
So the share to me, I would be a buyer if it breaks above that high of yesterday. That's about $59.50. Stop loss 53. My first target 67. The second target 75.
Okay.
It is for the adventurous investor, and as you can see, probably the RS is down about 0.05 or something, Jim. I don't know where
those
it is.
stocks go up too. It's 0.93. It's like that.
Yeah, it's less than 1 from what I can see here. It's not bad. I've seen worse.
Oh, yeah.
But nevertheless, it certainly wouldn't feature in a worry-free portfolio. But it is a good example, I think, of a swing trade. Trend is good. It pulled back on falling volume. That means there's no sellers. And if there's no sellers, if you want to buy it, you've got to pay more for it. Simple as that. So many technical analysis books get that wrong. They say that markets move up on rising volume. That's rubbish. Markets, in fact, rise on falling volume because the volume has to disappear before people will pay more for it. If there's lots and lots of supply around, why would you pay more for it? Okay. And that's
exactly right. Yeah.
That comes out of
exactly right.
Wyckoff, way back in the 1930s. The last stock is and also a smallish stock called OMI. And this one I found this morning, and again, it's moved up strongly, and it's consolidated in another 5-wave triangle. And if you draw a line below, a trend line below the lows there, through the obvious lows, Glenn, you can see that triangle in place. Now, very importantly, what in fact got me to this one was the gap. And I do a scan for gaps most days, and the market gapped, and it gapped close to that trend line, folks. So I think that there's a high probability that we're going to see this repeated. If you go back to the previous chart, previous time period, from the low, where the low marker is, to the high marker, if you subtract one from the other, that's the range, add it to the low of 2 days ago, and that's your target. So my target on that, folks, would be first target $8.40, second target $9. So we would want to close a break above today's high, that's above $7. Stop is about $6, and I'd be looking for a very fast move to $8.50 to $9 on that share. Those last two shares are for the more adventurous investor, and the first two would feature, I think, in most people's worry-free type portfolio.
Margaret, good question. How do you write a scan for gaps? If you need help with that, give our product support staff a call.
Marguerite, it's quite easy. If we had time, I could do it. Even I can do it. Okay, so it can't be that difficult, girls. So it can't be that difficult.
Well, we can help you out with that.
Yeah, Paul, product support will do that. Those youngsters across will do that in 10 minutes for you, okay?
Thank you for that, Joey. Joey put the number up there. David, good technical analysis behind your picks.
Great stuff.
I like the way you can analyze a stock from a graphical standpoint. And you know, a lot of people from a technical standpoint, they're just looking for certain things to happen, no matter what the market's doing to a certain degree. The market needs to move the stocks, but based upon, excuse me, certain things that you're looking for, technical analysis with the insight of looking at earnings per share and relative safety and things like that, puts those two things together, higher probability of making money in individual stocks. So beautifully done.
When you integrate the fundamental position of a share, which in my view is the search for value, with the technical position of the share, which is the study of trends and turning points, with the technical position of the overall market, which is a study of trends and turning points, and you can click those boxes and tick those boxes, then you push the probability of making a good decision up significantly. You have to be careful about your stops, because a stop that's anyway obvious will be picked off by the algos. So a good place to start would be to use the VectorVest stop, which is in fact well out of the traffic. It may mean that you trade a slightly smaller position, and of course one has to size your positions. First thing you need to do, Glenn, in my humble opinion, is you need to decide how much money's in your account. If you don't know how much money's in your account, you can't size your positions properly. If you can't size your positions properly, ladies and gentlemen, you're gambling, not trading. And if you go to the casino, you get free beer. So 1% or 2% in Market Wizards, Ed Sequoia, who's quite a guru of technical traders, he said that anybody who risks any more than 2% in any one trade is a gunslinger. If you risk 2% in any one trade, let's say you risk 10% in any one trade, and you have 3 bad ones in a row, the market goes into what I call a knot, where it sucks you in, spits you out, sucks you in, spits you out, sucks you in, spits you out. 3 bad ones in a row, you're down 30%.
Yeah.
If you're down 30%, you've got to say to yourself, what would the quality of your decision making be like? And there's a good chance that you'll be chasing, trying to get your money back. And do you remember Reminiscence of a Stock Operator?
I do.
Yeah, I remember old Livermore. He tried to buy his wife a fur coat out of the market, and at the end of the chapter he says that if you need a fur coat that badly, the market won't give it to you. So small positions, folks, well-sized. Very few people know how much money they're trading with. And when I go into the banks, and I do a lot of work at international banks, the biggest problem is that the youngsters there don't know how much money they're managing. They've got an amorphous sum of the bank's money. And as a result, they're trading some positions far, far too big.
It's easy when it's somebody else's money.
Always.
Do you know what, Jim? That's not the case for me.
Yeah.
I trade exceptionally well, touch wood, with my own money. But I'm much, much more nervous. My entries
in
are
that
not
sense,
nearly
yeah.
as good with somebody else's money.
Yeah.
My son is a trader at a hedge fund, and he's completely the opposite way around because he's mixed all his life with hedge fund traders that are quite happy trading somebody else's money.
Well, that's what I'm. Yeah, trading the bank's money.
But
Yeah,
we gotta keep going because we got 3 other people still left to do.
Okay.
All
Thank
right.
you.
So thank you for all of that insight. Very much appreciated.
And I learned that you have whiskey on your trading desk and beer on your roulette table.
And you need a Waterford glass that it takes 3 or 4 to wet the bottom to it. Okay. All right.
All right. This is going the wrong way really quickly. All right. Here we go.
So I get to follow the guy with the accent.
Yes. All right.
Make up that.
Is this your first stock?
Actually, it is, but let's not start there.
Okay.
Let's take a quick look at a market timing graph
Okay.
because I want to give you the context kind of my approach.
Where's my add new? I should have had that already up there. All right. Market timing graph.
Just the price is all we need. So, right, we're in this little pullback. The primary wave changed. We got a couple red bars. We're on a nice little bounce day today, but the primary wave is down and likely to stay down for at least the next 2 sessions. So in the face of that pullback, I'm still bullish because we're still in trend, but we're seeing some weakness here, right? So I want to be a little bit careful. And so in that context, I try to answer the question, okay, well, what is currently working in the market? And I've been here a couple times, so those of you who listen to me at all know that I love to take the sector approach to this. So I run over to the Unisearch tool. And my go-to search is in the Delta Searches group. Delta Searches sectors. There you go. I like sectors instead of industries. They're just more breadth. So we're going to do the 10-day RT Delta and go ahead and run the search. So this is looking for, on the sector level, the sectors that have had the best 10-day improvement of the RT value on a percentage basis. And so you can see running it currently, drug, steel, mining, container, right? So that's intraday data. Of course, I did this research yesterday after the market close, and the top performers were mining, drug, and healthcare. So we've seen a little bit of move. Some of the steel performance was due to some tariff news overnight. So let's just kind of take them in turn. At the time I did the research, the drug sector was in the top. So just right click on that, Glenn, and view the stocks in the sector. So now I'm presented with a VST list of all the stocks that are in the drug sector. Now to David's point, the biotech industry or sector is a little bit exciting, right?
For the adventurous investor, yes.
So my pick out of these was NBIX. Got solid fundamentals. It's in a nice strong uptrend, right? If you scroll over to the right, you'll even see that it has some pretty good earnings growth. Right? We've been talking about that a lot lately, right? At 39%. Right? So on the fundamentals basis in this sector, that's not small potatoes, right? So now let's look at the graph. So I like to start with a 1-year look back. Right, I'm looking for that bottom left, upper right, smoother the better, but particularly with hot stocks, I'm looking to see that the stock is still accelerating. Right, so I see this nice price action. It's consolidated a couple times, right? We're in the ramp up. Earnings per share is bottom left, upper right. RT is still accelerating in the near term, right, since really October on this last turn. So if I look at let's do 2 different time frames. I like to look at different time frames. So first I back off to the 5-year. Let's go that way. Right? And actually holding up pretty well for a player in this sector, right? I'm off the high, so I know that I have some resistance I'm coming into, right? This is on a weekly graph. Anytime you do the quick jump to 5 years, it goes to the weekly graph. So there's my resistance at the 5-year high. But I'm at 118, and that high is where, Glenn? At 126. So I've got a little room to run here. I do see the price action slowing down a little bit, so let's jump. Now we're going to go to the other end of the spectrum and look at the 3 months, or the 6 month. 6 month, I suppose. Right, I can see the price action over the past 5 sessions really consolidating here, right? Well, so's the market. So I saw a lot of that in these top performers that they had slowed. A lot of the stocks in the cohort have slowed as the market has stalled here momentarily. So let's play the breakout, right? We'll let the consolidation resolve. Let's play the breakout, let it come to us, assuming that the market also comes back to us. Because really that's the linchpin for me, is waiting for the market first to show the way. All right, so that's my pick on NBIX. They were in the news. I did, to make a note on the news, they just entered into a cooperative agreement to get an epilepsy medication. So that's on the back burners as well. So the other thing I want to talk about is, okay, that's the stock play, but we know the sector is, as we said, adventuresome, right? Because so many of these players rely on something in the pipeline, something under development, some kind of a news-driven event. So you also have the sector play. So we can go to however you want to get there, we can go to the viewers tab and do the ETF sector. Let's just go to the sector, which in this case is XBI. It's the Spider Biotech Sector ETF. You see the sector itself has been in a nice run from October, and if you've been following the markets at all, you've seen how many biotechs are at the top of the VST list. Right? So there's my sector play. It's just now coming up to resistance. If you go back to the 5-year here as well, Glenn. All right, start with a horizontal line right at current price. And you can see we're right at retesting that high from the beginning of the year, right? And then you have the ultimate high in short order after that. So be a little careful here, right, for the sector and certainly for XBI. Again, I'm letting these things come to me, though. I'm just identifying what's currently in favor or being favored by the market and trying to jump on board, particularly if they continue to run after the market starts to rise again. All right, so let's go back to our search. Our second best performing sector was the mining sector. So let's right click on that and look at the stocks in that sector. And again, on the VST sort, our good friend Sibanye. How many times have we called Sibanye, right? I think it's Steve's favorite gold trade.
No, actually, it's Kirkland is his favorite.
Is it? Okay.
Kirkland.
Well, I know Sibanye has been in the mix a lot.
Yep.
Right? So good upside potential, earnings growth rate again, pumping for this stock. Safety a little bit under average, so a little bit more volatile, and of course, very heavily driven by the sector. Now on Monday, we did the gold bugs timing, and the gold bugs timing study is still bearish, hasn't crossed back into bull territory yet. But the sector analysis is telling us that the sector is making a move. So we're a little bit early on the timing aspect of it, but on the stock play, on a sector play,
So what
It's now.
Todd is saying
It's time.
is it's a mover and a shaker. Even though it's not rocking, even though it's not bullish by way of what we do on Mondays, but it's a mover and a shaker.
and I'm playing it on that basis, right?
Right.
Because it's coming up in the sector analysis.
A big part of Sibanye's earnings is platinum, and I see Impala Platinum is number 2 in that as well.
Yep. And that was one of my picks last month, actually, was IMPUY. And it's still rocking and rolling.
Glenn, that story that I told you about my first speech in the stock market, where the guy had laryngitis.
Right.
That was the managing director of Impala Platinum.
Really?
Yes.
Okay.
He had laryngitis. He was the speaker.
All right, let's take a look at the chart.
Yeah. I'm sitting there, I'm like, what am I doing? All right. Let's go to that one.
I'm here to remind you.
I'm never at a loss of what I'm doing. So, Sibanye. I'm still at a loss. Okay, there we go.
All right, starting with the 1 year chart as ever, right? Bottom left, upper right, smoother the better, right? And even during the lulls, if you will, in the market, it's still held up pretty well. RT is accelerating into the current time frame. Earnings have never stopped, right? At least since March. All right, so nice uptrend there. If I go to the 5 year, all right, I'm off those highs, but it looks like I have a pretty good void up into that next level of resistance.
That's
at
a
10
lot
bucks.
of money to be made right there.
All right, you've got some resistance in 10 bucks, but then nice upside up to the high there.
5-year graph on a gold stock is eternity, right?
That's
Yeah,
well,
it's
yeah.
eternity, yeah.
Good point. I'm just trying to look left on the graph to see
Sure.
where I might have a roadblock.
Of course, yeah.
Right, it's just part of the standard drill. And then if you go to the 6 month look, my hardship here is I just did the gap. Right, and so I'm looking for that gap to follow through. So we may consolidate here a little bit, do a little churn and burn as the market digests that over time. And this, of course, will also be heavily impacted by what the market does. If the market continues to retrace, or if it starts to run again, and we go risk off, or risk on. So if I get the follow through and the market cooperates, but particularly if I get the follow through, that gap gives me a nice threshold for my stop loss, and we're off to the races. Or you can go to the previous pivot if you want, or weak resistance.
The gold price
weak
could also
support.
do an awful lot of good. The gold price is setting. It's pulled back to those Fibonacci people listening to 62% of the last range. The gold price, to me, looks as if it wants to push strongly into March 2020. So the gold price would also do an awful lot of good.
And a lot of these is what David called punts. Your buy stop and your stop orders on the way out are going to be very important on these type of trades anyway, right? I mean, would you look to put the buy stop above that yesterday's high, or would you, right? Or would you get in before that?
Well, yeah, I'd let the price action show me a little bit. So instead of just blindly buying the higher high, I am looking for a bullish candlestick that penetrates well into
Some
that price
confirmation
action.
behind
Yeah.
the move. Gotcha. That makes sense.
Yeah, a wide-ranging day, even though it's still moving sideways, could put you in accidentally.
The share is showing incredible relative strength. If you look at the Barrick share, for example, during this period, Barrick has sold off pretty much every other gold share in the world, has sold off with the gold price. And this one hasn't. It has a bit of platinum in there as well that's helped it. But if the gold price should turn, this thing will fly, I think.
I agree. All right. Let's get into this is your last stock?
Yep, third. Let's in healthcare. Let's just stay with the chart. We don't need to go.
Okay.
We don't need to go see it. Looking at the 1 year price action consolidating here for a long period of time here, and I certainly want to go back and look at the 5 year. Right. So we broke out of that on David's gap at 140 back there in the beginning of November. Been a nice follow through since then. Looking at the 5 year, say, wow. Okay. So in that context, nice progression here, consolidation through the middle of 18 into 19, and I'm breaking out of that. So nice acceleration of RT coming back, and earnings never gave it up.
Yeah. Even when it consolidated.
Yep, so let's go back to the 6 month and look for our entry. I'm just coming back on today's action, right? Yesterday we had I'm looking at it with the pullback. We got a bounce day yesterday. I'm thinking, well, nice, right? That gives me a pivot. Nice breakout above to the new high is my entry, and there we go.
Actually, that's a good candlestick pattern. Bullish engulfing with follow through.
Yeah.
That's it, right? Bullish engulfing with follow through. Rising earnings, rising RT. Actually, today would have been a good day. With today's prices of the market are moving up. Today would have been your confirmation just off of that candlestick pattern right there.
Yep, and I might start nibbling because the market conditions overall are still weak.
Okay.
But I could start building a position with a little nibble here if you want to be a little more aggressive.
That trade as well.
As an aside, gentlemen, the gap through the trend line with rising earnings per share, I think is probably one of the highest hit rate phenomena that I've ever come across in markets. And that's why I call it the rocket launcher. And in the UK, we have swing traders that I've taught this to who do nothing else but scan through the 2,200 shares in the London stock market, looking for obvious trend lines in shares with good fundamentals, but especially that earnings per share. So as you can see, from the two highs to there, if you look down below, you can see earnings per share is rising, and then you get the gap, and the gap just means that something has changed, and the chaps in the city or on Wall Street have been told to buy it at any price. Don't try and finesse a good entry, just buy the bloody thing. And that's exactly what's happened there. Outstanding trading technique to enter positions.
All right, I'm going to do a couple of things real quick. Todd, you never introduced yourself and told everybody what you did.
My name's Todd Schaefer. I'm the manager of research for VectorVest.
How long have you been here, Todd?
12 years, Glenn.
You've been here for 12 years.
I have been.
Okay. I just wanted people to know, I mean, you just jumped in and just started chit-chatting. I wanted people to have an idea.
Let's get to the meat and potatoes, Glenn.
Wow, only I can use that terminology. That is copywritten. I'm going to sue you. Okay, now with that. So I'm going to do something a little different, because this, if you, and especially for the people who have been new here, if you like what you've seen here, I want to remind you, remember, comment, like, and subscribe. All right, so I'm going to take a little break real quick, because something else that I want to bring up to you. We have something called a financial freedom summit. It's a brand new thing. It's going to be 12 hours worth of instruction on how to use the VectorVest software. It's going to be a lot of us here that are going to be giving presentations. It's going to be worldwide. David's going to be doing a presentation. So it really is a financial freedom summit. And I want to show you something real quick. I'm going to go out. Oh, I can't do it that way. Hold on. I'm going to go out to the summit. All right. That's not it. That's it. The Financial Freedom Summit, it's going to be next week, December 17th. Folks, it is free. Number one.
2 weeks.
Is it 2 weeks?
Yeah.
Oh, it's 2 weeks. Sorry, man, jumping the gun. Todd's face went, huh? It's 2 weeks from now. It is a live stream for 12 hours. All right. Now, does that mean you have to sit and watch your screen for 12 hours? No. But attend the VectorVest Financial Free Summit, a free online event, terrific actionable information. Folks, when I say that this is new, it's new. We've never done it. There's a lot of logistics. Now we're going to say linguistics. There's a lot of logistics.
There's some linguistics there.
There's a lot of logistics going on behind the scenes to make this happen. We're extremely excited about it. Whether you're new to the market or not new to the market, you've been here for a while, you want to learn more about what we can provide for you. We're one of the only softwares out there that support our subscribers as deeply as we do, with a lot of free content. Thus, this forum is free. I got to stress that. Before you set up and go, well, I got to sit and pay. No, it's free. You want to learn from the beginning to the end, from the rooter to the tutor, from the alpha to the omega, from the top to the bottom, to the in and the out, everything you can put in there. That's what this is all about. If you've never been to any kind of an event like this, you need to go. You need to go. Why? Because it's going to be an investment in your ability to make money. Everybody's here not just to hear us talk. Everybody's here to play this game to make money. VectorVest is going to help you to do that. This summit is going to help you to do that. It's free. I got to put that out there. Building wealth and achieving financial independence requires intentional, deliberate action on your part. And this is important. It doesn't happen by accident. Could you trip into a trade and make you some money? Yes. But really, it doesn't happen by accident, and it doesn't happen overnight. Expectations need to be set. This is going to help you. Why are you laughing at me? What? Oh, Glenn is out of control again. Well, no, I'm not. Listen. It's all about being able to effectively, and Jay, you're messing around with me. It's free, Jay. It doesn't happen overnight. Setting expectations. We're going to walk you through how to make things happen. And I ain't going to say it anymore. Yes, I am. It's free. So,
Did you say free?
I did say free. Wow. December 17th, it is going to be a worldwide event as far as VectorVest is concerned, because we're going to have presenters from all around the world giving you this information. All right, so I wanted to take a break between the first two presenters and us, the last two presenters, because it's that important. All right, because it's that important. And guess what? Mary just won the live stream pass to the Tampa 2 Day. Way to go, Mary.
Well done.
Way to go, Mary. All right.
Good job, Mary.
Good job. All right. And you can register for the summit. Joey, can you put the link to that? All right, Joey's going to put the link to that. You can register now for the summit as well. But folks, this is an event like no other event to help you make money in the market. So, go. Here we go. All right. With that being said, all right,
Are you done?
Oh yeah, I'm done.
Okay.
I make sure that I didn't have my wipe coming out because somebody's going to say I was preaching that. Well, you got to go to the summit. Woo! And okay, no, I'm not going to do that. I started it.
Too late.
It's too late.
There's some things you just can't undo.
And that was one of them. All right, so Jim is going to introduce himself first, and then he's going to talk about his first stock.
All right. Well, hello, everyone. Thanks for taking the time to be here. My name is Jim Penn. I'm the manager of retirement services here at VectorVest. I've also been here just about 12 years. Todd and I came on right around the same time. And so it's good to be here. All the familiar names. Great to see you guys are here. As you guys know, from my retirement side of my work here, when I do these hot stocks, I like to joke around that they're usually maybe a little more lukewarm, because I'm usually looking at the longer term. So the fundamentals come into play. And it's funny how we've been talking about fundamentals and the technical analysis that goes with it, which if you break it down in the VectorVest program is VST, right? It's the value, safety, and timing. But you add these other technical indicators and it becomes very powerful. Anyway, what I've done is my first stock is Audio Codes Limited, AUDC. Okay, Glenn has the graph up here. And I wrote down quickly what they do. They're the vendor of advanced voice networking and media process solutions for the digital workspace. I have no idea what that means. I'm only half joking, because the reason I say that is because Glenn, let's go to the spreadsheet first, or the viewers tab first. So when I look at a stock like this, how did I come across this stock? We all have different ways. Each time we come, I try to come up with a different way to find some of these stocks. And what I did this time to find AUDC is simply go actually to the stock viewer page. Glenn, if we can go there. What is the stock viewer page? It's simply the 8,200 stocks or whatever we track now, sorted by VST. That's all it is. So I decided this time to go up and find a good quality stock that was somewhere near the top. I did a little cherry picking through here. And Audio Codes is right now the number, is number 6 ranked stock out of the 8,260 we're currently tracking. So that's kind of where I started. Instead of just going into ruler stocks or long-term winners, I still wanted a high relative safety stock. And so we found one here. 1.39 is the current relative safety. The price appreciation potential or relative value at 1.48, very strong. So right out of the gate, and it's what we would call fairly valued. At 24.25, trading at value roughly at $27. Glenn, if you scroll over just a little bit more, we'll take a look at some of the other indicators. So you've got relative timing at 1.46 as we saw, 1.50 as we saw from the graph, strong momentum, short-term momentum, and it all adds up to a very strong, very nice VST rating. I love the CI, the comfort index. Right, without even looking at the graph, which we already have, we know that northeasterly direction of the graph patterns is what we want to see. And then, of course, we've talked about earnings growth rate.
Jim, in the UK, we call the comfort index the secret weapon.
That's it, yeah, the secret weapon. I love it. Yeah, you get a sense. I mean, we call it the price growth persistence. What better way to define a stock that you want in your, listen, whether it's your retirement portfolio, whatever it might be, in a swing trading to a retirement portfolio. So that's what we like. That's why I like the stock. That's where I got it from. So Glenn, you can go back to the graph. And once again, we talked about, I've said this before on the panel as well. When Steve and Jerry are here, and obviously these guys all are candlestick experts and all. It's just something I've never learned, as my time on the trading desk always taught me. It all comes back to support and resistance, all of it, right? Because Glenn, when we kid around, why do I tell you, why does the stock go up today? ABC, so whatever it is. Why did that stock go up today?
Because there were more buyers than there were sellers.
There was more buying than selling going on, right? And so that's where the supply and demand comes in. So I'm a big support and resistance guy. So I like the fact that audio codes has moved up. Obviously it's got some support. I don't know what price that is, right around 20.
Oh, darn it.
Yeah, it's right around 20, Barry. You can see on the marker there. And again, you've got, is that today it hit the high? Hit an intraday high today. On the stock, which actually, if you go back, I think it might be an all-time high on AUDC. But that longer look, now this stock does pay a dividend. It's not a huge dividend, not a huge yield, so I won't focus too much on that. But I just like the movement of the stock. I've got a buy-rated stock, number 6 on the stock viewer. And again, I would probably put in a buy stop right above the higher high if I were going to trade it today, and keep that stop somewhere around support. Looking at a little longer term, or evaluate it as I went through. But I just thought the nice graph pattern, certainly the nice earnings pattern and earnings growth rate, which we have focused on a lot here already today. So
I like the equity curve, even on a 5-year graph. I love the equity curve. 6-month graph. Look at that.
Yeah, you've got earnings, that are strong, and we could use, and not that I use this, but David, I don't know, you tell me if I'm right or wrong, if I recognize, and it's not as long term, of course, as what you were looking at, but we've got some consolidation. I still have earnings rising, right? And then we broke above, a full candlestick above of what was resistance.
And it was just like, that was, ain't that your rocket bottom, rocket thing of the shooting up into space?
Well, look at the last gap.
Yeah, there's a gap. There's a gap in there, certainly, yeah.
And it's breaking above resistance and gapping up. Bob, you just say rocket
launcher.
Rocket launcher.
See, I did it by accident. See that? So,
and then it pulls back and kisses the old top.
Yes, it did.
If you see a market pulling back and kissing, invariably that means that there's institutional activity there, because the only people who've got the strength to buy the low of the day are seasoned institutional traders. The average retail trader, with greatest respect, invariably buys the high of the day, because there's a little bit of confirmation there.
Hey, Tom, I know you're out there. You know what to type in the room, right? I know that you're out there. When we use support and resistance, Tom is going to type it in a second. But I love that candle did go right to that level of support, and then it ran up. It ran up.
Somebody asked the question there. Mary asked the question, where did we get the AUDC, which search? And Mary, this time, instead of using a search, I kind of went back to some basic VectorVest fundamentals, and I just went to the stock viewer. And I really just looked up, I kind of cherry-picked through those top stocks. To what Todd was talking about earlier, looking at industries and sectors, I actually was looking at the healthcare HMOs. I believe WellCare Health, is one of those. You don't have to go into it. But it's was another one I looked at, and some of the other stocks in that industry, and just looking for what Todd was alluding to earlier about the strength of whether it's a sector or an industry. So anyway, so that was more of a not so much a retirement stock as it is just a good quality, strong earnings growth stock, and again, pays a dividend, but that's not really the point in this particular stock. So I thought I'd share that one.
And people know what I like about support and resistance. Both Tom put it in there. Man, this stuff really works. Support and resistance really rocks and rolls. I knew you were here, Tom, but Jay beat it out for you. He beat you out.
It's just all right. It's all about where the buyers are and the sellers, and as David said, it's more about the institutions and the funds, and where is that support? Where are the buyers willing to step in? And
well, it's a lot tougher to do. It looks really easy in hindsight. It's a lot tougher to do when you're actually there.
Sure,
And it all comes down to the old thing. Right? There was a famous bond trader in Chicago called Charlie D. And he used to say that anything that works hurts.
I had an old bookie named Charlie D.
Oh boy.
Um,
And he said,
He was from New York. Yeah, that's right. He said, if it doesn't work, it hurts.
You don't pay.
If it don't work,
Anyway, so-
you can't pay up. It's gonna hurt. Let's
Anyway,
go.
so that was my stock, basically coming from the stock viewer page, and just, sometimes we get into this and we forget the power of VST. We forget the power of simply clicking on the stock viewer page and finding a good quality stock. And I love the graph pattern, and especially as we've just beaten up the power of earnings per share and the earnings growth rate of that, and a buy rated stock to boot. Now, the next one I chose was JP Morgan. Now, this does come with more of the retirement hat on here. This is set to a 5-year graph. I like to call it, on the bottom, that's the dividend. That's the dividend payout. Now, JP Morgan doesn't come up on the drip list, the 25 plus, or the dividend aristocrats. I believe it comes the 10 to 24. But it's got a very strong history of raising dividends, paying their dividends, and you can see I like to call it the golden staircase as it continues to climb. That's the dividend payout. You've got a very nice yield here of just about 2.75% with a $3.60 dividend. So from that standpoint of generating income on a good quality stock, I love that. Glenn, you could probably throw support resistance on here as well. You've got, again, and this one is the 5-year look, and I like that. I'm just learning this myself today. So we've got consolidation again.
Sorry, Jim. I just wanted to make sure that
No,
they
that's
can see
okay.
it.
Yeah, no, thanks.
There you go.
So we have it consolidating. Earnings per share is still rising. Stock breaks out. Good dividend, good long-term retirement type stock to go out and play with. Now, you've always got the ability, in downtrending markets, and we don't talk much about it here, but we talk about it in retirement services. We talk about it in our coaching groups, about the ability to use collar trades, protected puts, and this is the perfect example of a stock for the long term. I could sell covered calls against this. I could, place my put spreads or collar trades in times of uncertainty in the market. I just love the stock, and I just think, the guy who runs the company is a pretty smart guy, Jamie Dimon. Kind of got to believe they'll just keep moving in that direction. So that's more of my retirement stock for today. The longer term, just moving nicely, broke resistance, and is starting to move up now. So more of the prudent / conservative look. And those are my two stocks for today.
They also, Jim, pulled back beautifully. The low of the last 6 months is exactly the same as those previous highs, a little bit back there.
Yeah.
And that's also quite a strong feature of that. And the way the market went sideways, went up a little bit and then came down, is a classic flush out as well. And that's a pattern that a gentleman that I've got a great deal of faith in called Richard Wyckoff, who wrote his books 100 years ago. He would have called that a Wyckoff spring. And for those of you that are coming on my course on Friday, I'll spend an hour talking about the Wyckoff spring.
I knew that. I just forgot the guy's name.
Okay. Richard Wyckoff.
Anyway, yeah, there's so much to read in that. But, for me, I'm just looking at the 5-year graph again. You can go to 1 year or even 3 months. And, you see the same picture. And we're looking, again, for that northeasterly direction on price. And, again, you have JP Morgan. Now, I was going to use Bank of America. I was going to use some other, well-known OEX type stocks, blue chip stocks here that has kind of a similar pattern if you want a lower price stock. And in the same vein, I guess, two of the others, and you don't have to bring them up in the graph. Visa is a stock I love. We own it in our retirement model portfolio. MasterCard was another stock. All these stocks, again, for the longer term. Dividends, growth.
Visa and MasterCard is going up specifically because of me.
Yeah.
It's all because of me. So thank you. You can all thank me because Visa and MasterCard is going up.
But anyway, that's so those are my two stocks. One a little more. I wouldn't even come close to calling it aggressive, but just using the basics of VectorVest and putting the VST to work, and then just a good quality blue chip, safe dividend stock. If you go to real quick, and then I'll finish up. You can go to the spreadsheet again and just take a fast look. If you scroll over at the dividend information for JP Morgan. The CI is at 1.28. It's going to move with the market, but you've got earnings growth rate. You've got strong earnings per share. If you scroll just a little more, we get some dividend information, and then we'll wrap it up. All right, so you've got a nice $3.60 dividend, a strong yield, strong dividend safety. So a nice stock to put in your Christmas stocking for your retirement portfolio going into next year.
Glenn, I think that leaves you.
It does. I'm going to start here. My two stocks, I went a little different route. By the way, my name is Glenn Tompkins. I'm a senior instructor here at VectorVest. I've been here for 15 years. That's a long time. Get ready to hit 16 in March. All right, so when I first started here, I knew nothing about the stock market. And everything that I've learned from VectorVest. But I'm not on CNBC or MSNBC because I'm not that good. So I'm good, but I ain't that good. How about that? Does that make sense? I'm asking you, Todd.
Roll with it, yeah.
Okay, there you go.
You're good, Glenn.
But and I'm comfortable in my own self knowing that what I've learned from the VectorVest software has done extremely well for me from a financial standpoint. All right, so that's what I do. You'll hear a lot of me on webcasts and on Trending Thursday, which will be live again on YouTube tomorrow. I will be for Trending Thursday. Oh man, no, it's no Brian, it's no Go Patriots, no. And Jay says, Glenn, you're okay. All right, put him in timeout, Joey. Thank you very much. All right, all right. Keeping all that in mind, the stocks that I used, LPG, a shipping stock. For me, I wanted to do more of what was going on in. From a search perspective, hot stocks. We look at hot stocks. We give them to you every night in the VectorVest software. So one was a hot stock, one was a heart stock. All right, you'll understand what I mean that in a second. One was a hot stock, one was a heart stock. All right, so LPG, which is a shipping company, and if everybody out there who knows me, what's my favorite stock in the whole wide world? Apple. There is my heart stock. And again, we'll talk about it. So those are my two stocks. I'm looking at Apple. And even though I love Apple, I'm not in love with Apple. Okay, number one. Number two, there's a right and a wrong time to be in Apple. Looking at all of the stocks in this list with the exception of EIDX. Good Gordon Gin there, David.
It's for the adventure.
It's hard. It's part of the adventure.
Not for the faint of heart.
That is not for the faint of heart. For the longer term investor, a lot of you will say, well, wait a minute. Apple won't even outperform a AAA corporate bond. We'll talk about that. It's a good, safe stock still. And the stock is still in an uptrend. Look at the CI. The stock still has a good comfort index. Something else that you might not like. Look at the earnings growth. They are growing their earnings at a little bit negative, and it's the only, there's three stocks. Mine is one of three stocks that has a negative earnings growth. But they do have an earnings of $12.92. Guess what? They got the most in earnings. Probably, though, it's because they have the highest price on this list as well. My earnings yield sitting at 4.92. They pay a dividend, and guess what? The dividend safety is at 92. They still have a higher probability. Really, Jay? They really have a high probability of maintaining or growing their dividend. All right. So there's a couple of things that I don't like about it, and as I mentioned, it is more of a heart play than a hot play. Let's go to the graphs. Let's go to LPG shippers. Now, a couple of things that I look at a little differently. I'm in more of that swing trade type of scenario. So on my graph, I'm looking at a 20-day exponential moving average. Look at that. For the most part, it serves as a good level of support riding that stock's price up. What is the stock doing right now? A little bit of consolidation. But look at earnings. And this is again, I love that David Paul brought this up. Stock is consolidating. What's the earnings doing? Earnings are still rising. High probability that the stock price should continue to high. And think about this. These are stocks for the new year. what you're looking at are stocks and that going to have a high probability of still rising going into the new year. When we look at earnings per share, and we didn't talk about this, especially to the new people, our earnings per share is forecasted earnings per share. So what I'm saying on LPG, the earnings by this time next year should be higher than $2. That gives me a good opportunity to know that if earnings is the engine that drives the stock's price higher, projecting earnings higher than what it is right now is a good play. Stocks, if earnings is the engine that drives the stock's price higher, rising earnings, high probability the stock's price is going to keep moving up. Bottom left, top right, very little interjections below. I just wanted to use that. That came from Schoolhouse Rock. Interjections. Anyway, all right. So back and forth. I know I just spiraled off a little bit. That's the life of being around.
Pull it back. Pull it back, Glenn.
But for the most part, staying above that 20-day exponential moving average. And again, look at that. Big money, David said, has the wherewithal to know, coming off of that level of support or that level of that 20-day moving average, look at what happened. And there you go again, Tom. Well, this is not a support and resistance, but bouncing off a level of a moving average, look at that run. So what I'm looking for as a get-in price, about 12 cents higher than the high. About 12 cents higher than the high. That helps to ensure that I'm buying into a rising stock. Everything else is there that I need. The earnings per share is running up. Let's go put on support and resistance real quick. I didn't change the colors. I'm not going to. Looking at that, there's the last level of support. Every time a stock hits a new high, it automatically creates a level of resistance. So we're at one level of resistance. I'd like to see 12 cents higher than that level of resistance. Tom still even types it in the room. All right, Tom, love you, Tom. I love you to death. All right. Earnings earlier this year was negative. They're doing something right. Think about that. They've now gone from negative earnings to positive earnings. There's a good change in the culture in the company. The stock's price is moving higher. Earnings is good. So that is my first stock, and it's in the transportation shipping industry. When the shippers move, they move. When the shippers don't, they don't, and they sink. But even with that being said, notice that this shipping company has not had a lot of pullback. Think about that. Not a lot of volatility. I can't say that for a lot of other shipping companies, right? A lot of shipping companies have been sandblasted with volatility. This has not. So in the shipping space, this may be a really good choice to take, especially knowing that it's a little bit more resilient even when the industry gets beaten up. So keep your eye on that stock. Anybody?
Interesting your decision to buy the higher high. Now, we have the regression trade, right? You've kissed the 20, right? So you're very close to the high. It wasn't that strong a pullback. So buying the high in this case, maybe okay, right? But in previous examples of that, previous iterations of the pullback, right, you're looking for that explosive price move, or at least the strong price move back up off of that low, not necessarily waiting for the higher high. Right? In other words, you can get an earlier entry depending on how much pullback there was in the price action itself.
And
not a lot of pullback in the history of this 6-month graph.
I will agree with what you said about the shipping companies without that volatility. That is not what you're used to seeing in
right.
this type of stock. So I do like that about it.
And Jay put up TNK. Jay, I'm not going to put it up on the graph, but look at that graph compared to LPG. Tell me which one you like better. Think about it from that perspective. Even if you look at TNK or you look at dry ships, which is no longer around, they dried up. They're out of business. All right. Anybody else? Nope. All right. So this is my, not hot play, but my heart play. Apple, in case you didn't know, Apple just recently hit historically new highs. Overall, this stock is just, for me, it's amazing because I own everything Apple. So
what do they do again?
Don't start with me. They make the best.
Fruit packers, I think, right?
No, they're not food packers. They make the best devices in the world. And again, that's me being extremely biased. I got Apple everything. I got Apple everything. And I still own my first Apple phone from 2007 when they first came on the scene. So this is, has it not been susceptible to downturns in the market? It has. I'm looking at a 10-year graph. Look at over 10 years, how many times the stock has been a sell? Very little compared to the stock being a buy or a hold. Look at the equity curve from the bottom left to the upper right, hitting historically new highs. Let's go put this on a 1-year graph. Now, you look at that and go, good Gordon, Jim, look at that earnings. Well, it is what it is. Earnings got hit back in earlier this year. Earnings got hit, but now earnings is back on the rise. Now, the reason why I call this a heart play, because did it look as good as a lot of the other stocks that were brought up on the panel today? The answer to that question is no. But what I do like, even with the falling earnings per share, what's the stock's price doing? And even with the most recent time period, as the stock is moving sideways, what's earnings per share doing? Apple is a name that ain't going away no time soon. I know that it's been adversely affected by the tariffs. All right? It is adversely affected by the tariffs. So I'm going to keep that in mind. If I put this now onto a 6-month graph, where am I looking at? Well, the stock, this 20-day exponential moving average, if you get in when it goes above, it does a really good job keeping you in and keeping you from panicking when it pulls back. Panicking from when it pulls back. When it does go below the 20-day exponential moving average, that's probably a good opportunity to get out. But look at this. For the most part, it does, that 20-day does a really good job of keeping you in that stock without panicking. What's happening today? The stock's price is coming up above the 20. So a couple of ways to enter this. Could I get in early knowing that the stock's price just went back above the 20? Yes, because it seems like every time it does, the stock's price tends to pull higher. Number two, let me take off support and resistance. Number two, should I wait until it goes above the all-time high? You could, because that's creating a beautiful level of resistance, right? That's not what I wanted. That's creating a beautiful level of resistance. So maybe you say to yourself, let's wait till the stock's price goes above that level of resistance, which is at 268. We're only $6 away. Or if you want to get in a little bit more aggressively, knowing that historically that 20-day exponential moving average has done a really good job getting you in and keeping you in, even when the stock's price moves, man, that 20-day is good. It is so good. And today, we're breaking above. If you want more confirmation, maybe you wait to see if tomorrow, if we continue to be above. But over the last 3 months, earnings pretty even though we saw on the longer term graph, the stock's earnings per share have pulled back. It's getting back to where it was about 3 months ago. And I like it. So yes, this is more of a heart play, but if you look at the stock ain't going nowhere. It just is not. All right. I know David might have had a little something that you wanted to say about Apple.
Well, yes,
He's going to put some worms in your Apple.
Wow.
I rode that move up the page very nicely. There's a gap right at the start of that move in September or something that I got in on. But I sold mine on Monday. It was a spread bet at a London leverage player. I was 5x leveraged, so I got out of it Monday. And I should have phoned you because we could have done a deal and saved the spread.
But interestingly enough, look at that. The stock's price did close, even though it was an open candle, the stock's price did close below that 20-day exponential moving average. So you know something? I'm not far behind in saying, could I have gotten out there? I would have pocketed a good little piece of change. And now, what is the name of the game? To buy low and sell high. Who's to say that this is not the new low as the stock continues to move higher? So I could have gotten out, taken my money. Yeah, I would have gotten in at a lot higher price, number one. Well, number two, let's back up a little bit. Let's say this is a long-term holding. I like Jim's idea. Apple is a stock that I know is going to be around. When this happens, what can I do? Sell a covered call. And stay in a stock like Apple over the last 5 years, still moving from the bottom left to the upper right. Still being able to hold it during this time without taking on the full brunt of the pullback of the stock, sell the covered call, and that way you help to offset some of this this downward move. Look at that, above the 20, back below, above, and since about this time, above the 20 and still rocking and rolling. Still rocking and rolling. I like that the 20-day exponential does a good job keeping you in a stock like Apple.
Yeah, and with any of these, I would just comment on, what's your, depending on the time frame you're looking at, if you put it on a 3 or 6 month graph or an intraday graph, it's still going to be what's your objective? Are you swing trading it? Are you putting it in a retirement portfolio? Are you buying and holding?
So it all depends on what time period you're looking at.
Macro thing.
Right.
You're going to do that on whatever.
Before you define the trend, you have to define the time frame.
Yeah,
sure. You've got to know exactly.
Am I swinging it? Am I trading it? Am I putting it in my long-term holdings? And going back in time, looking at a graph like Jim would look at, a 5-year graph, helps you to know, do I want to hold this long-term? Looking at a 3 to 6 month graph will let me know, do I want to swing trade it? Putting it on an intraday graph over the last few days will let me know if I want to trade it. So it all is time frame.
Yeah, there's no right or wrong. As long as you know what your objective is, and that's what you're analyzing as you look at it.
The graph is telling you,
them,
it's definitely fallen out of growth phase, right? So a lot of that price bump, and you follow the ecosystem better than I do, but the latest changes to that ecosystem are the resurgence or refocusing on Apple TV and their streaming services, right? So how much of that price action is a bet on that re-energizing some growth? Well, there's a technical side of the trade of just trade the price action and let's move on. From an investor standpoint, well, if you like the dividend and it's yielding well and you think it's relatively safe with that flat earnings action, right, then you can make that decision for yourself.
Okay. By the way, this is probably the best pick out of all of us. I just want you to know that. Okay.
Oh, because you made it.
Exactly. That's the reason why I said it. Okay.
All right. Flag the tape.
Flag the tape. Glenn said it. Badger, you're the best. All right. We've been keeping track a lot of what's going on in the chat. Thank you for chatting in. I am going to wrap this up a little bit. For those of you who are brand new, who do not have a subscription to the software, we are offering you a special. Let me show you the special. I got to get to it. We are offering a special, which is 99 cents. Try VectorVest for 30 days for 99 cents. Talk about a Christmas special. For any of you who are not subscribers, folks, 99 cents. The link is, Joey, can you put the link? Oh, there it is. There's the link. The VectorVest.com/YT. Click on that link. It will take you to this page. Fill in your name, your email, your password, the country, yada, yada. Make sure you're not, well, even if you are professional, we can help you with that. You know what you get with this? You get one-on-one training, 99 cents. Keep this in mind. For 99 cents, free one-on-one training to help you get started. We have model portfolios that you can utilize, which are made by this man right here, Todd Schaefer. He does a lot of work to put our model portfolios into effect for you. They will tell you when to buy, what to buy, when to sell. Weekly group coachings webinars. Oh, that's Todd again. Todd does what is it?
The successful investor.
The successful investor. If you are a subscriber to the software, you get those weekly group sessions. Unlimited world-class analysis of over 19,000 stocks worldwide. We track a lot of stocks for value, safety, and timing, and if they're under or overvalued. Accurate market timing signals. Nobody else out there times the market like we do, and we don't prognosticate. Big word of the day. Write it down, Jim. We don't prognosticate.
Define it for us quickly.
We don't prognosticate what the market's going to do. We follow the trend of the market. All right. So all of that, folks, for 99 cents. And last but not least, the Financial Freedom Summit. Go. That's it. Go. It's free. You want to learn everything from the beginning to the end about how to make better trades from a retirement standpoint, from an option standpoint, from a swing trading standpoint, from a technical standpoint. All of that is covered in the free Financial Freedom Summit, folks. It's there, and that's that. So the link, Joey already put the link in there earlier for you for that. Joey, do it one more time for me. The link to register for the Financial Freedom Summit. Again, in its 12 hours, it's going to be worldwide instructors taking you through this software. Click on that link. Click on that link. It's free. With that, I would like to personally invite you to Trending Thursday tomorrow on YouTube at 2 p.m. Eastern Time. We look to see what stocks are in the news. We utilize the VectorVest software to help us to determine and corroborate the news behind those stocks. And we also always take a look at what's going on in the market. But that's at 2 o'clock, again, a live stream, again on YouTube, 2 o'clock tomorrow. And if you enjoyed today, we enjoyed having you today. Don't forget to comment, like, and subscribe. Comment, like, and subscribe. Subscribe, then comment. You can like it later, but I want you to do some comments. Let us know how you felt about all of us. All right, and don't forget Patrick's Facebook session on Thursday. That's absolutely right. That's at 11 on Facebook, talking about the mobile app. That's absolutely right. So for anybody who's asking about the mobile app, we do have Patrick France. He does a Facebook presentation at 11 a.m., which specifically where he supports the mobile app. So any of you who are asking questions about the mobile app and how to use it, tune in tomorrow at 11 o'clock on Facebook. He does an outstanding job.
Mary's looking for the link again.
Mary's looking for the link. Where is the link? You don't have the Facebook link? You have to go to our Facebook page.
I think that came before Facebook. I think she's looking for the other link.
The link for the summit?
I think so.
All right, and if that's the case, Joey's taking care of doing that for you. All right, it's www.vectorvest.com/summit. That is for this free financial summit, folks. Go. You're going to be blown away by what we have going on. It's the first time it is worldwide, and that is that. With that, folks, I want to say thank you for being here. We appreciate it. Thank you for the panel being here. Thank you, David, from coming all the way from across the pond just to be here because he's going back tomorrow. No, he's not. He'll be here for a while, but thank you very much. Love your insight. Jim, you're okay. Todd, you're okay too.
Just okay?
Yeah, just okay.
Sometimes
I do what I can.
not
That's
okay.
just okay. But you know when you pick stocks,
Take care, Jay.
just okay is not enough. So, adios, folks. Adios, arrivederci, ciao, au revoir, sayonara. Going to see a lot of you tomorrow. Later.